Good morning, everybody. Hey, welcome to Tuesday, November 17th. After setting records yesterday on the Dow and the S&P 500 record closes, will we continue? Can we continue? That's the big question that Dave and I will discuss this morning. But before we do that, let me remind you that we are seeing record numbers in the indexes. So the question I have for you is, how much risk do you still have in your portfolio? Now is a great time to analyze that and make sure that you're on track for the right numbers. What's your risk number? 1 to 100. That's the question. Give me a call to walk through our financial x-ray to determine if you're on track to head forward into retirement. Hey, Dave will be with us here next.
Me better when my stock's going. Is it going to happen today? Well, about time we found out. 8:38 here. Time to check in on your money and see how Wall Street is doing today. It was a banner day yesterday on Wall Street. There's an old phrase about what goes up must come down. Sometimes it's just a temporary thing. Sometimes it's, oops, maybe we overdid it. Let's head downtown and see what's going on this morning to the offices of Statler Financial Services. Phillip Statler standing by, and hoo-ha, Phillip, was it a big day yesterday, huh?
Yeah, it was, Dave. I mean, we hit some record highs on both we've already hit some intraday record highs, but we closed at some record closes yesterday on the Dow and the S&P 500.
That's right. Dow was up by a total of 471 points yesterday, up to 29,950. That's a new record close. Standard & Poor's a new record close at 3627. It was up by 42 yesterday, and NASDAQ wasn't a slouch. It was up by 95 points. It just had a little bit bigger run-up earlier, didn't it?
Yeah, it did. And so it didn't hit new records because it's been there before, and it's trying to get back up there again.
Yep, and it seems like it's the one index that's recovering this morning is when you have a couple big days of run-ups like this, you got to assume that some of the computer programs and the guys that throw billions around at a pop say maybe it's a good time to take some profits, and that would be natural this morning, I'd assume, wouldn't you?
Well, it definitely would be after hitting some gains like we hit yesterday. I would think that there'd be some profit taking in store, and there's been some earnings that come out that are probably pushing a little bit too in terms of selling.
Oh, that we'll get to in a couple of minutes, which isn't what we were looking for. Retail sales reports this morning out of the federal government. It's funny. You and I were comparing notes because we look at different sources as what as economists in the markets were expecting, and they really are kind of all over the place for expectations. Retail sales last month grew by 0.3%. Which 3.6 per year, 3.6% per year. That wouldn't be a bad number to end up at, but the market kind of expected a little bit more than that, according to some of the sources, didn't they?
They did, Dave. They expected about 0.4%. Not a whole lot of difference, but it's really the retail X auto that's the number that's hurting everybody, because I think you told me it came in at 0.2%. Is that right?
Yeah, once you remove electives like, buying a car, retail sales only grew by 0.2%, and one of my sources was expecting a 0.6% increase in that number.
Yeah, and mine was expecting 0.5%. In either case, that is a pretty big miss, and so once those numbers came out, the Dow futures started falling even a little bit more.
Ouch. They don't need, especially going into the retail shopping season we're going into. The last thing in the world we need is a blemish on the retail sales picture. One thing could buoy things up a little bit. You and I have periodically poked fun at Tesla and marveled at their technology. One of the big validations for any company is when you're named to the Standard & Poor's 500, and Tesla joins the S&P 500 in December. I got a hunch their investors are happy with that.
Yeah, they really are. And it's going to be later in December, like right before Christmas. December 21st is when they will open as part of the S&P 500. So you're right. That's driving Tesla up about almost 12.5% this morning. Still not a 52-week high for them, though, but still a good number for them. They're one of the few companies that are actually in the green today in terms of earnings and stuff.
And it's one of those days where my big winners are not very big, and my big losers is a couple of pretty substantial ones out there. Let's see if any of them released earnings reports this morning. Earnings season continues, and you got some household names that gave us their quarterlies, don't you?
We do. We got some big names. Walmart reported, and they came in at $1.34 a share, which is better than the $1.18 they were expected. Revenue beat forecast also. Their same store sales rose more than expected, so that was good. But they're trading down this morning, and I don't know if it can't be because of their numbers, and I didn't see any guidance heading forward. But so I'm thinking maybe they're just caught up in the Dow 30 and the S&P 500 being down today, but they're down 1.7% this morning.
It could be profit taking. It could be you take the retail sales numbers being a disappointment, and everybody's saying, "Check with their guidance. We're not seeing a bright picture as we're expecting to."
Exactly, and I think the same thing is probably going to be true with Home Depot. Home Depot reported $3.18 a share, which was 12 cents better than expected. Their revenue came in above Wall Street expectations. Also, the same store sales killed it though. Their same store sales jumped 24% compared to the 17% that was expected. So that was a pretty big jump. They also did some, and this could be putting some pressure on them. They took the temporary enhancements to their payment and compensation program and made them permanent. So so I think that may be hurting them this morning because that's going to cost them, they said, about $1 billion a year in employee cost.
They were one of the companies that gave a bump to the vital services employees during the shutdown, weren't they?
Exactly, and they're going to continue to do that. So that became permanent. So they're down 1.5% this morning.
Good heavens, you got no good news for me this morning,
no,
do you?
I told you Tesla was the bright spot, and they didn't have earnings. They're just getting added to the S&P 500. So let's continue with some retail. We had Kohl's reported. They came in and posted a profit of 1 cent a share, which is tremendous because they were expected to lose 43 cents a share. So good news for them for the quarter. Revenue though was a little bit below what they had forecasted, and the same store sales were down a lot more than expected. So that's really affecting them. They're down about 1.5% this morning also.
Geez, Mary Sunshine lives down at Statler Financial today.
Yeah, I'm trying. I'm trying, but it's just been hard to find green ink this morning, other than that one. So I have, let's see, I think I have one more. Yeah, Smile Direct. I remember when they became an IPO, but they reported earnings. They lost 11 cents a share this last quarter. That was less than expected. They were expected to lose about 14 cents a share. So a good thing there for them. Revenue top forecast. They are seeing a brighter acceptance in what they do and their process. But again, not getting any help from the market today. They're down 3.6%.
About the only gator that I can see that I could explain in a heartbeat is Pfizer, who just got oversold yesterday off of the Moderna news. It's just one of those days on Wall Street. And like we both said, it's primarily just profit taking after a 2-day big run up.
Yeah, it is. I did find a little bit of good news for you, though. Costco, they didn't report earnings, but they did declare for the fourth time in 8 years a special $10 dividend that they're going to pay to shareholders on that own the stock on December 2nd. So that's bumping them up about 1.5% this morning.
That's a pretty big dividend. What's their stock price like?
$385.
Oh, so it's not that big.
No.
I was going to say my primary dividend stock pays 50 cents. And I say, Gower, that's good. But then again, it's only a $19 stock, so I'm happy with that.
That's right. Exactly. So
kind of makes a difference. Yeah. Resetting the table for the morning. Big day up on Wall Street yesterday. All three indexes up really healthy. The Dow and the S&P setting new records. Computers like that, but they also tend to trigger sell signals when junk like that happens. 45 minutes early. Where are we heading this morning, Phillip?
Dave, we got a lot of selling going on right now in the futures. We've got the Dow 30 down 0.9%. That's $269. We got the S&P 500 down 0.75%, down $26. We got the Nasdaq eking up just a tad, a little over 0.1%, which is about $15 on the Nasdaq. So nothing to write home about. Looking a little iffy this morning. We'll have to see how things open up when the market does open up at 9:30. The gold and silver. We got silver trading pretty flat. I mean, it's down a little over 0.1%. We got gold up 0.25%. Crude oil, Dave, going the wrong direction this morning. I think probably because of all the new lockdowns and stay-at-home orders coming out, but down 1.5% to $40.75 a barrel.
Yeah, Poop got a friend that was going to take a trip out to California until they announced that they're likely to lock down California. That kind of put the kibosh on that. So I would imagine a lot of driving probably is getting postponed or reviewed carefully with the holidays ahead now, and that can't help the price of oil, can it?
No, it really can't. You're right. I mean, I think I saw on the news last night that basically, I think California basically has gone back to outside dining only and takeout only. So that's a big deal, folks, when it comes to the economy and people working.
Yeah, inside dining at the restaurants is completely kaput in California, and the governor's been talking about a full lockdown out there. So, yeah, things are upsetting to say the least. Overseas markets, Asian markets were up based upon our good news from yesterday, but remember, they closed about 6 a.m. our time this morning. European markets are responding to our futures. They're heading south, not by a lot, but by the 1% range or so. So it's not a major sell-off, but you're seeing red ink over in Europe as well. Like we said at the outset, Phillip, what goes up must go down, and if you're just a short time away from retirement, this is an ulcer-producing day. It doesn't have to be if you control your risk. How do I find you to do that?
It doesn't, Dave. You're right, and that's one of the things that I think is vitally important is that folks know their risk number from 1 to 100. What is your risk number? If you don't know what that is, you need to give me a call, and let's schedule a financial x-ray. Just call 863-382-0037, or you can go to my website, statlerfinancial.com, and there's a link there where you can get on my calendar. If not, hey, catch the Statler Financial Radio Show this weekend, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730.
I just got news yesterday afternoon that the Gator game is going to be an early afternoon game on Saturday, so we're going to miss Saturday, but 6 o'clock on Saturday and 10 o'clock Sunday, though. Definitely, all right?
All right, man. You have a great day. I'll talk to you again tomorrow.
Thank you, my friend. It's 105.7 Light FM and Statler Financial Services, Phillip Statler. Wedding.
Hey, everybody. I want to thank you for joining us today. Remember, if you don't know what the risk number is in your portfolio, give me a call. Let's schedule a financial x-ray. 863-382-0037. Have a great day. I look forward to speaking to you again tomorrow.